Imagine stepping into a grand chess tournament where the silence is palpable, broken only by the soft click of pieces moving across polished boards. Each player is a strategist, their mind a battlefield of possibilities, calculating not just the next move, but the intricate web of consequences that will unfold 5, 10, or even 20 moves later. A pawn's advance is not a random act. It's a deliberate choice, part of a grand design to control the board, anticipate the opponent's response, and position for victory. Every decision is a thread in a tapestry of strategy, woven with precision, patience, and foresight. Now transpose this mindset to the world of trading. This is the essence of what separates the amateur, who stumbles through the markets like a novice chess player, from the professional, who navigates with the clarity and control of a grandmaster. Thinking 10 steps ahead is not just a skill, it's a discipline that transforms trading from a reactive gamble into a calculated art form. Before we continue, make this commitment. This channel isn't about quick fixes. It's about developing traders with mental strength and discipline. If that resonates with you, join us. Subscribe now so you don't miss any of our upcoming videos. Stay until the end and keep progressing with us, one mindset shift at a time. This video isn't just another trading video, it's a mirror for your mindset. Like now, comment what resonates and stay until the end. Because one idea here could change how you think and how you trade. Let's go! Amateurs approach trading like a beginner sitting at a chessboard for the first time, overwhelmed by the pieces in front of them. They see a candlestick pattern, a price spike, or a breakout signal and act on impulse, thinking, "This looks good, let's take the trade." Their focus is myopic, tethered to the immediate moment. The next candle, the next tick, the next opportunity to win. They're playing checkers, not chess, reacting to the market's surface-level signals without considering the deeper currents that drive price action. This short-sightedness is their undoing. A single trade, entered without context, becomes a domino that triggers a cascade of consequences: emotional turmoil, eroded capital, and fractured confidence. Consider the amateur trader who spots a bullish setup on EUR/USD. The price is pushing above a resistance level and the excitement is palpable. Their heart races. Their cursor hovers over the buy button and their mind screams, "This is it, don't miss the move." They enter the trade, driven by the thrill of the moment, without asking critical questions. What if this breakout fails? Where's my stop loss? How will this trade impact my risk exposure for the day? What's my plan if news disrupts the market? Without answers to these questions, they're not trading, they're gambling, betting on hope rather than strategy. When the market reverses, they're caught off guard, scrambling to react, often doubling down or moving stops in a desperate bid to avoid a loss. This is the trap of one-step thinking, a reactive mindset that leaves traders vulnerable to the market's volatility. Professional traders operate on a different plane. They don't just see the chart in front of them. They see the market as a dynamic, multi-dimensional chessboard where every move is part of a larger strategy. When they analyze a setup, they're not asking, "Is this a good trade right now?" Instead, they're probing deeper, constructing a mental framework that accounts for multiple scenarios and their ripple effects. Their questions are layered and strategic. What happens if this setup fails? How will it affect my risk allocation for the week? What if an unexpected news event flips the market's direction? Does this trade align with my monthly objectives, my risk profile, and my psychological resilience? This ability to think 10 steps ahead transforms trading from a game of chance into a game of skill, where every decision is deliberate and every outcome anticipated. To illustrate, let's meet Priya, a seasoned trader who's eyeing a potential breakout on the GBP-JPY pair. The price is testing a key resistance level, and the amateur within her feels the familiar pull to act immediately. But Priya has trained herself to think like a chess grandmaster. Before placing the trade, she pauses and engages in a disciplined ritual of foresight. She asks herself a series of probing questions. What if this breakout is a trap? a false move designed to lure in retail traders. Where's my invalidation point, and how will I confirm it? If the trade goes against me, how will it impact my daily risk limit and my emotional state? If the breakout succeeds, where's my first profit target, and how does it align with the weekly trend? What's my contingency plan if volatility spikes due to a surprise economic report? By addressing these questions, Priya shifts from reacting to the market's whims to anticipating its possibilities. She's not just trading the breakout, she's orchestrating a sequence of moves that account for every plausible outcome. This disciplined foresight is the hallmark of professional trading. The market is a master of deception, designed to exploit emotional reactions with sudden spikes, false breakouts, and unexpected news. These events are traps for the unprepared, luring amateurs into impulsive decisions that erode their capital and confidence. Professionals, however, are rarely caught off guard. They anticipate chaos, expect the unexpected, and plan for every plausible scenario before they place a trade. This preparation grants them a profound psychological edge. When the market throws a curveball, they don't panic. They've already visualized the scenario in their mind and know exactly how to respond. This mental clarity allows them to remain calm and composed, even as others are swept away by the market's turbulence. Thinking 10 steps ahead is not just about technical analysis or risk management. It's about understanding the interconnectedness of every decision. Every trade you take today ripples into your trades tomorrow, next week, and beyond. A single reckless decision, driven by emotion or overconfidence, doesn't just jeopardize one trade, it can derail your entire trading journey. Professionals understand this chain reaction. They know that a small loss today, if strategically managed, can position them for a larger gain tomorrow. Like a chess player sacrificing a pawn to set up a checkmate, they're willing to accept short-term setbacks for long-term success. Consider the story of Javier, a trader who once blew 2 accounts in 6 months. Javier was skilled at spotting setups, but his downfall was his inability to see beyond the immediate trade. A breakout would excite him, a reversal would panic him, and a string of wins would inflate his ego, leading to reckless over-leveraging. After his second account wipeout, Javier hit a turning point. He began journaling every trade, not just documenting entries and exits, but also mapping out multiple scenarios before each trade. He asked himself, what's the best case outcome? The worst case? The most likely? How will I respond to each? How will this trade affect my psychology and my account balance? This practice rewired his approach. Over time, he stopped chasing the market and started leading it. By thinking 10 steps ahead, Javier transformed his trading from a roller coaster of emotions into a disciplined process. Within a year, he was consistently profitable, not because he predicted the market perfectly, but because he prepared for it meticulously. At its core, thinking 10 steps ahead is a psychological discipline. The market is not your opponent, your own emotions are. Fear, greed, hesitation, and overconfidence are the silent assassins that lurk within every trader, waiting to strike when uncertainty or opportunity arises. Amateurs fall prey to these emotions because they lack a plan. When a trade goes against them, they panic because they never visualize the loss. When a trade goes their way, they get greedy, adding to positions without a strategy. Professionals, by contrast, neutralize these emotions through preparation. They've already played out every scenario in their mind, so nothing the market does can surprise them. This mental rehearsal creates a state of calm clarity, allowing them to execute their plan with precision. To understand this, let's revisit Priya's GBP-JPY trade. As she analyzes the breakout setup, she's not just looking at price action, she's anticipating her own emotional responses. She knows that a false breakout could trigger frustration, tempting her to revenge trade. She knows that a winning streak could spark overconfidence, nudging her to increase her lot size recklessly. To counter these impulses, she pre-commits to a set of rules. If the breakout fails, I'll exit at my stop loss and take a 15-minute break to reset. If the trade hits my first target, I'll scale out half my position and trail the rest with a predefined stop. If I take 2 losses in a row, I'll stop trading for the day and review my journal. By establishing these rules before the trade, Priya builds a psychological fortress, shielding herself from the market's emotional traps. This pre-commitment is a cornerstone of professional trading. It's not about eliminating emotions. Humans will always feel the rush of a potential win or the sting of a loss. The goal is to strip emotions of their power to influence decisions. By deciding in advance what you'll do in every scenario, you remove the need to make choices in the heat of the moment when emotions are at their peak. This is why professionals often describe their trading as robotic or mechanical. They're not relying on willpower or intuition, they're executing a script they wrote when their mind was clear and rational. So, how do you cultivate this chess-like foresight in your trading? The process is disciplined but accessible, built on habits that transform your mindset over time. Here are 5 actionable steps to start thinking 10 steps ahead. Redefine the role of each trade. Stop treating every trade as a make or break moment. Instead, view it as a single move in a much larger game. Your goal is not to win every trade, but to execute a strategy that compounds success over time. Before entering a trade, ask, does this setup align with my weekly or monthly goals? Is it worth the risk in the context of my broader plan? If the answer is no, skip it, no matter how tempting it looks. Amateurs chase action. Professionals prioritize alignment, master scenario planning. Before placing a trade, map out at least 5 possible outcomes. The best-case scenario, the trade hits your target. The worst-case scenario, the trade hits your stop-loss. The most likely scenario, the trade follows your expected path. And the volatile scenario, a news event spikes price. And a stagnant scenario, the market consolidates. For each, define your exact response. Entry method, position size, stop-loss, profit targets, and emotional management. Write these scenarios down in a trading journal. This exercise forces your brain to anticipate rather than react, reducing the emotional weight of any single outcome. Zoom out to the bigger picture. Trading is not about the next candle or the next session. It's about where you want to be in a week, a month, or a year. Define your long-term objectives. Are you aiming for a 5% account growth this month? A 20% return this quarter? Every trade must serve these goals. This means saying no to setups that don't fit your strategy, even if they look perfect. It means resisting the urge to overtrade when the market feels hot. Professionals know that the best move is often no move at all, preserving capital for high-probability opportunities. Build emotional safeguards. Anticipate your own psychological triggers. If you know you tend to chase trades after a loss, set a rule. After a loss, I take a 30-minute break before analyzing the next setup. If you get overconfident after a win, reduce your position size for the next trade by 50%. These rules act as guardrails, protecting you from your own impulses. Write them down and keep them visible. Tape them to your monitor if necessary. Over time, these habits become second nature, turning emotional reactions into disciplined responses. Journal relentlessly. A trading journal is not just a record of trades, it's a tool for training your mind to think ahead. Before each trade, document your scenarios, rules, and expected outcomes. After the trade, review what happened. Did the market follow one of your scenarios? Did you stick to your plan? What emotions surfaced, and how did you handle them? This reflection builds a feedback loop, helping you identify patterns in your thinking and refine your foresight. Over time, journaling transforms you from a reactive trader into a strategic one. Thinking 10 steps ahead doesn't make trading easier, it makes it clearer. Losses will still happen. Volatility will still test your resolve. But when you've planned for every contingency, the market's chaos becomes a structured puzzle you're prepared to solve. You stop seeing price swings as threats and start seeing them as opportunities to execute your strategy. This shift in perspective is what makes trading not just survivable, but winnable. Consider the market as a vast ocean, with currents and storms that can capsize the unprepared. Amateurs sail into this ocean with no map, reacting to every wave and gust of wind. Professionals, by contrast, are navigators with a detailed chart and a sturdy vessel. They've studied the tides, anticipated the storms, and plotted alternative routes. When the market surges or crashes, they don't panic. They adjust their sails and stay on course. This is the power of thinking 10 steps ahead. It turns the unpredictable into the manageable, the chaotic into the strategic. One final note on the psychological battlefield of trading: beware of overconfidence. Fear is loud and obvious, announcing itself in your racing pulse or trembling hands. But overconfidence is a silent predator, creeping in after a string of wins, whispering that you've cracked the market's code. It tempts you to abandon your rules, increase your risk, or ignore your stop loss, convincing you that you're invincible. This is the moment when traders are most vulnerable, not when they're losing, but when they're winning and feel untouchable. Professionals combat overconfidence with deliberate humility. After a winning streak, they might halve their position size or take a day off to reset their mindset. They remind themselves that the market is indifferent to their success, that every trade carries the same risk as the last. They use mental resets, like journaling or reciting a mantra, "The market is not me and I am not the market," to stay grounded. This discipline ensures that their decisions remain rooted in strategy, not ego. The market will always try to lure you into the present, tempting you to act on impulse and emotion. It will dangle perfect setups, sudden spikes, and unexpected reversals to test your resolve. But when you think 10 steps ahead, you transcend these traps. You become the architect of your own trading game, designing a strategy that accounts for every twist and turn. You don't need to predict the market's next move. You need to be ready for it. So the next time you open your trading platform, pause. Ask yourself, am I playing checkers, reacting to what's in front of me? Or am I playing chess, planning 10 moves ahead? The answer to that question will determine whether you're a trader who survives or one who thrives. In a game where most are consumed by the now, the ability to think 10 steps ahead is your greatest edge. It's not about being right every time. It's about being ready every time. Start today. Before your next trade, write down 5 scenarios and your responses to each. Commit to your rules. Journal your outcomes. Over time, this discipline will transform you from a reactive trader into a strategic one, from a checkers player into a chess grandmaster. The market doesn't reward hope or impulsiveness. It rewards preparation and foresight. Embrace this mindset, and you'll not only survive the markets, you'll dominate them.